Still letting your cash nap in a 1% savings account? What if 5 minutes right now could grow into 300,000 by retirement hands-free? Europe now runs 10.8 million ETF savings plan, up 42% year on year. Germany alone added about 33.8% more new plans, topping 9.5 million. This isn't hype. Europe's investors are flocking to ETFs because they're cheap, automated, and diversified. Now you might think I need thousands to start. In most places you can start with 100 euros per month. You might also think fees will eat my returns. Average index equity ETF cost in 2024, 0.15%. We will pick one of the cheapest out there. Finally, timing the market is hard. Dollar cost average strategy removes timing stress through monthly investing. Okay, let's have a look. Zero starting investment, 10% annual return, which S&P 500 can easily manage. And let's take about 25 years and 250 euros a month. Calculate and you end up with 331,000 euros. That's compound interest. Now, if you want to see it visually, that orange line allows your money to work for you harder than you work for your money. Now, what happens if the time horizon increases? Let's add another 10 years. We end up nearly with 1 million. Anyone who's under 30, maybe it's time to put some of your money away towards your investments to make sure it works harder than you do. Have a look at that blue line. That's like normal amount of money you invested, and the orange is the money which made money and actually went back to work and earned even more money. If this is confusing, I'll do another video on the compound interest and how it works. But initially what you need to understand is as you make money, that money starts working later. So any profit you made in a year one actually end up working for another 34 years. Anything what you made in year two actually went working for another 32 years. So you end up compounding the balance, and that's where the actual sort of increase comes from. Again, there might be a solution where you don't have that much time and you only have 25 years, but maybe you can invest significantly larger sums. You end up with over 500,000 by investing 500 euros a month. How hard it is to do these things from actual practical standpoint, not just with calculator. Not that hard, to be fair. Let's jump into the practical side. Let's pick one of the most common indexes in the world, which is S&P 500. It represents top 500 businesses in America, and for the last 100 years, the average return is around 10% with all the ups and downs. Now, first of all, we have to open a brokerage report. Pick what you like. I'll use Freedom 24 as an example, but functionality should be similar to yours. If you decide to follow exact steps, bonus link is in description. Second step is add money or top up your account. This idea of topping up by debit cards should be immediately dismissed. We simply use bank transfers. Why? Because debit cards are expensive. You normally pay about 2 or 3% simply for topping up your money. Bank transfers should be absolutely free. First step, let's find an ETF we want. First thing I want to do is jump into justetf.com. This is an analysis tool which allows me to look for any ETFs I want. Now, I won't be able to invest through here, but I will be able to actually look for the things I would like to invest in. Now, I already know what I'm looking for, but this one is one of the biggest and a little bit more expensive option. And we can also go and find a cheaper version, accumulating option. So these two, again, if you go through the very specific details, we look at the fund size. The bigger initially, the better on a very simple term. Total expense ratio is how much you're going to pay for actually having that portfolio managed for you. Don't forget that these are like the 500 companies which you have at any given time, and you can invest, I think, 15 euros to actually own all of them straight away. Obviously, that 15 euros is split through 500 companies, and as the companies make profit, you earn more and more money back. Now, we can ignore 52-week low and high, 4-week chart. This is like short-term results. We also want to have a look that it's accumulating or distributing. This is simply if the companies pay the fund dividends, they either choose to reinvest it, that's accumulating option, or distribute it to the shareholders. So if you buy an ETF which is distributing, you'll get dividends or distributions every 3 months. If you buy accumulating, you won't have to deal with any taxes up till the point you actually start selling. If you're starting, I would stay with full replication. We don't want to jump in anything more specific just yet because it's a very simple way to say that you're investing in actual assets like all of those companies. And if you want to search for these ETFs, 𝐼SIN code is one of the easiest ways. So if I pick this, I simply go on my Freedom platform or your own broker platform, enter the code, and these three options are usually represented by dollars, British pounds, and euros. 𝐿608 is the one which is in euros. You can find it here. And if you want to actually invest in it, you need to make sure that you have enough money for that one unit, which is nearly 500 euros. You open a security session by logging in with additional credentials to say that you're able to invest. You wait for the stock market hours to be open, and you simply press buy and confirm, and that's it. Now, if I want the second option, which is significantly cheaper, still exactly the same option, SPYL, it's in euros, it's the same strategy, you're just simply investing only 11 euros. So if you have an ability to invest only 100 euros a month or 200 euros a month, maybe cheaper option would be the choice for you. At the same time, if you can invest 1,000 or 2,000, maybe the more expensive option will be sort of your choice. But don't forget, these strategies are exactly the same. Like, doesn't matter if you're investing in SPYL or 𝐿608. The only difference, I think, 𝐿608 is significantly bigger, but its total expense ratio is 0.07 and SPYL is 0.03. It's a little bit newer option, and you can see the inception date is in 2023. This one is in 2010. So the fund is massive because it just simply existed for that long. So what's next? Well, pick the one you want, check you have enough money, pick how many units you want, click buy and confirm. That's it. Now, how can you make this one of the easiest ways to invest? Automate the transfer to your investment account and then block 5-minute window to buy an ETF you want every month. It's that simple. Now, one more thing to take into account, your ETF shares sit in a segregated custodial account. Even if a broker disappeared tomorrow, your holdings stay yours. But you have to be sure the broker you picked has license. After this, simply set your plan, sip your coffee, and let time grow your wealth. Hope this helped. Don't forget to like and subscribe. See you next time.